Welcome to Cross-Border Tax Talks, where we discuss the latest trends in international taxation, from U.S. tax reform to the OECD's latest developments. I'm Doug McHoney, PwC's International Tax Services Global Leader. PwC's Pillar 2 engine, powered by Beacon, is a game changer for Pillar 2 modeling, provision, and compliance calculations. Built on a graph system utilizing over 20 years of international tax technology, this cloud-based centralized rules engine is developed by a team of Pillar 2 tax experts from around the globe. PwC's Pillar 2 engine is currently available as a service and is now available to license. On this week's episode of Cross-Border Tax Talks, we're back in Washington, D.C., in PwC's Policy on Demand studio, where I'm excited to have Tadd Fowler back on the podcast. Tadd is Senior Vice President, Treasurer, and Global Taxes at Procter & Gamble. Tadd, welcome back to the podcast.
Doug, thanks for the invitation. Glad to be here.
This studio is a slight upgrade, I will acknowledge, from the last time that you came to Westminster Studios, but I'm very excited to now have you in the formal PwC Policy on Demand / Cross-Border Tax Talks podcast. But before we begin, Tadd, an important disclaimer for listeners. Please note that Tadd is here for educational purposes only and is not representing PwC. All views are his own.
Thanks for that disclaimer.
You're good with that?
No, I'm good with that.
Okay. So let's dive into things, Tadd. We're always exciting to have you on and love your perspective. And a lot has happened in the world of international taxation in the last 2 years. So plenty to talk about. But before we do that, you've been at P&G for over 19 years.
Hard to believe.
If you can believe that.
Hard to believe.
You started as Vice President of Global Taxes and have since been promoted to Senior Vice President of both Global Taxes and Treasury. What is a day in the life of Tadd Fowler like in your position?
Yeah, it's a good question. And obviously it depends on the day, but I think there are some general themes. One theme is clearly trying to make sure that my teams are focused on our priorities, and I'm there to help keep things moving forward when maybe there's barriers that need to get busted, or maybe there's some misalignment in terms of what priorities should be. I want to make sure that I'm there to help people resolve those so we can continue to keep things moving forward. Staying abreast of current developments is a huge part of my job,
Sure.
Whether it's what might have happened overnight in some market around the world, what may have happened from a potential legislative proposal perspective. I think I do spend a lot of time generally early in the day kind of reading what's happened over the last 24 hours so that I know if there's anything we need to get immediately focused on, keeping whatever stakeholders might have interest in that particular issue, making sure they're aware of it so that we can continue to be as proactive as we can be dealing with whatever may come at us on any given day. And so I think it's all about keeping stakeholders informed, making sure I know what's going on from a current development point of view, and helping keep our priorities moving forward in whatever capacity I can.
How do you manage, Tadd, the goal of being strategic and forward-looking and thinking about the future of P&G, tax policy related to that, with the inevitable fire drills and things that come up that are just out of your control? I mean, I think that's a challenge for anybody in their jobs, particularly when you get to level of more senior management.
Yeah.
But how do you manage that?
It's a good question. I mean, it can be a challenge at times. I think it helps to have very good teams and strong teams that are along with you, trying to make sure they're identifying what is happening from a current event perspective. A lot of it's knowing how to direct things that need to go get worked on immediately. And again, having the resources, the capabilities in your organization, the capacity in your organization to be able to continue to step back and continue to think of things very strategically and move those forward. And at the same time, deal with those fire drills. But I'm blessed with an incredibly strong organization, both specifically my tax and treasury organizations, but other multifunctional partners that are very good at getting involved in fire drills when we need them, whether it's our government relations group, our local finance teams, our local general management teams in some cases. I think we're very good at getting alignment very quickly in terms of what needs to get done. And when it's a priority, because it's important, it'll get the focus it needs. So it's all about having good teams, good networks, and a system that allows us to make sure we can identify those priorities and hit them quickly.
Well said. So Tadd, earlier in your career, you had 2 stints in public accounting before you went to P&G. I asked you this question a number of years ago. I was like, do you miss clients? Because you were great with clients and client relationships. And I asked you, do you miss having clients and that client service experience? And you said, well, I'm at P&G. I have clients. It's just different. Can you unpack that? What do you mean? Because this was very interesting to me.
I still have a lot of clients, Doug. I think that's kind of maybe a misconception of what happens when you go from a consulting role with lots of clients to working for one company. But I've got lots of clients internally. I've got multifunctional partners that need my help or support with their priorities. I've got a C-suite that relies on me to make sure that they are informed on the things that are important to be informed on. I've got, I think about my role from a policy perspective. I've got policymakers that you can view as a client, right? The education that we invest in policymakers and trying to help them understand what we think is good policy is just another kind of vector of how you might think about a client. So it's, it's different, but it's the same in many respects.
Yeah.
Right.
I mean, they're stakeholders,
they're
right?
Stakeholders.
I think of clients, but I also think obviously within our organization, the people that are clients, but are still stakeholders that I need to serve in my role.
For sure.
I hadn't looked at it from that framework. You mentioned that a number of years ago. I think actually back on the Doug McHoney vlog when we talked about moving from industry, that was a number of years ago.
Yeah.
If anybody wants to look up what Tadd and I looked like 10 years ago.
A little grayer hair, maybe. But
I think a few more gray hairs for me.
No, but it's a great observation. And for me, I didn't necessarily appreciate that till I got to P&G. But one would argue I have more clients now than I did back when I was at the firm.
I can see that. Yeah. I can see that. All right. So now I want to kind of shift more to what we're going to get into tax policy, but really wanted to start with P&G's broad-based priorities. We're recording this at the end of 2024. We've got a new administration, new Congress coming in the U.S., lots of change globally, and we're going to unpack and get into some of the specific policy issues. But before we do that, what are P&G's broad-based priorities in the coming year? We'll start with tax, and then we'll talk about treasury.
Sure. Look, tax first and foremost, we want to make sure we're as compliant as we can be around the world with whatever tax and financial reporting requirements there are. Want to make sure we're paying the right amount of taxes at the right time. That's kind of job one. Job two is we want to make sure that our business has the support they need from the tax organization to ensure that they understand the tax implications of decisions they're making on a day-to-day basis. Obviously, policy is a huge priority for us this year, not just this year. I mean, it's always been a priority for the company. Support of pro-growth, simple to administer tax policy, we think is a platform that we can utilize around the world as we get into discussions on what good policy is. But policy is a priority. We can unpack that a little bit. And certainly the organization, right? And how we continue to how do we invest in our organization? What capabilities do we need to invest in? How do we continue to collaborate and work as well together as we can as a team is something that we are continuing. That's always a continuous improvement exercise. And then, of course, our journey on tax certainty takes a lot of resources and will continue to be a huge priority. And just when you think you're starting to get to the finish line on tax certainty, as you can see, a lot of changes around the world kind of undo that a little bit. And so will be a continuous journey, but tax certainty is a huge priority for us, has been a long time. I feel like we've made a lot of progress, but still a lot of work to do in that regard.
Yeah, and obviously the nature of the reconciliation process in the U.S. Congress just causes us, we've mentioned this a lot in the cross-border tax talks, and certainly challenging for businesses. Maybe one of the other things I wanted to mention before we move to Treasury is P&G's approach to transparency. And you mentioned this on the last podcast, and I believe you have a document that you publish and an update as needed called P&G's approach to tax.
Right.
And I think you were really one of the first, and frankly, I've heard a lot of taxpayers mention this really around the globe, and we've really sort of seen some of the regulators actually want to start to more formalize this. But why did you guys publish that? And maybe tell listeners a little bit about that.
Yeah, and I would say certainly one of the first U.S. multinationals.
Yeah,
there were certainly some European multinationals were ahead of the curve on this. But look, I think, as investors want to make sure that they know the companies they're investing in, that they're responsible companies, and whether it's climate, whether it's other ESG initiatives, whether it's tax, right? There's a desire for transparency on behalf of the companies they're investing in. And I actually was starting to get involved in a lot of discussions with many stakeholders, potential investors, or ESG firms that were hired by potential investors to do their analysis of a profile of a company. And through those engagements, really figured out that we had an opportunity to become a little more public with our approach to tax. And so we decided that in an effort to ensure that we had something out there that stakeholders could review about our approach to tax, we wanted to go through that process and get it out there for them. And it's a living document, right? And as we continue to learn more through those stakeholder discussions, we continue to update that to the extent we can. But I view it as our part of our pillar of transparency, which is a key enabler to us trying to get tax certainty, is ensuring that those stakeholders that want to know what our approach to tax is, what our principles are, have the opportunity to review that in some level of detail. And I would say it's certainly paid dividends. It's a very big investment to go through that process, but I think we are seeing some evidence of dividends from that investment.
All right. So what about from a treasury perspective, as far as just broad-based priorities?
Treasury priorities, they've remained the same my 20 years at P&G. Is, our goal is to make sure the company's got the liquidity it needs to be able to meet its capital allocation objectives, to meet its investment objectives. As we like to say very simply, we want to make sure the company's got the cash where it needs it in whatever currency it needs it, whenever it needs it. And it's really not, don't need the business focused on that. We want them focused on the business. We'll take care of making sure they've got the money they need when they need it. And then obviously trying to protect, as the company generates earnings that convert to cash, we want to protect the dollar value of that cash. So there's a lot of work done in respect of just trying to manage the risk associated with not necessarily having cash in dollars, or maybe having cash in difficult markets that may have capital controls, et cetera. But it's all about making sure the company's got the money where it needs it. And then my organization also has responsibility for our global insurance programs, as well as our pensions and other post-retirement employee benefits. And the risk and the work there is really about trying to de-risk those things as much as we possibly can. And so it's a very fascinating job. It's something that I was blessed to get the opportunity to get exposure to with the company. It can be very intellectually stimulating. And
Sure.
As I've learned, there's a lot of synergies between tax and treasury that we've been able to recognize. And so from that perspective, it's been a great journey having both those hats.
All right. So let's move on now to some more specific tax priorities. And what I wanted to start with was really the tax function. And as you think about kind of the service as you described it that you provide to the rest of the organization, what are some of your priorities related to the tax function?
So again, I think we have a lot of people focused on the tax certainty element, and that comes in many different flavors. One is get a lot of tax certainty by making sure you're as compliant as you can be around the world. So we're always looking to make sure we're right sourcing our compliance work, taking the right approach to risk as it relates to our compliance work. And that's an ever evolving, again, target, right? So priority there. I think we continue to try to up our inventory of advanced pricing agreements. Certainly, I think transfer pricing and cross-border flows of goods and services, not just P&G's biggest exposure area from a tax point of view, but most multinationals' biggest exposure area. And I think we made a lot of progress there, but APAs are generally good for 5 years. Advanced pricing agreements that sort of solidify that we are allocating the right amount of global profit to a country for tax purposes. We'd like that certainty, and that takes a lot of risk off the table. But APAs are only good for a certain period of time. You got to go through renewals. You enter into new markets. You've got countries that didn't have a program before that implement programs. And so that's a continued pretty large swath of our work as an organization. Working with the business, again, and making sure they have got the tools and information they need to make decisions about whether it's supply chain, organizational structure, whatever. As we like to say, there's no decision that happens in P&G that doesn't have a tax consequence.
I love that. I love it.
we try to make sure we're only getting involved in those things that really matter. And, we spend a lot of time putting guidance out there for the business so they can go have some basic guidance and answer most of the questions themselves. But again, that takes some effort to pull together.
What about like consumption taxes, environmental taxes? Is that or environmental?
Yeah.
Is that within your purview? And
For sure it is. And as we were talking earlier, Doug, before this, consumption tax is a you've seen tax policy evolve internationally. What you've seen is less reliance on countries from income taxes and a move towards consumption taxes. And for us, we collect and remit a lot of consumption tax for governments around the world. So our ability to make sure we've got the right systems and processes in place to be as compliant as we can has been a huge investment by the company. It's been a huge investment in people and capabilities, technical capabilities by our organization to be able to get to a standard that we think can meet what our principles to tax say that we do. And so that's been an area we put a huge investment in. We've starting to invest in our ESG taxation capabilities, right? We see a lot of evolution on carbon taxation and other sort of green taxation. So we've needed to build our capabilities there. So again, as I talk about spending time on organization, it's really about looking forward and saying, what capabilities do we think we need? Do we have those capabilities? How do we develop those capabilities? How do we stay on top of that? And that's, again, every year it seems like as we go through that analysis, we're coming up with new things that we think we need to invest in, which also does require us to disinvest in some things as well, too, because like most of my peer group, I think like everybody, we're trying to do as much as we can with the historic budgets we've always been given. And I think we've done a good job of managing ourselves through our company's productivity initiatives, which are well documented. But that's just part of the job, right? Part of the job is you're going to make investments. You got to figure out how you're going to make those.
So what about this is I can't help but ask. What about your approach to Pillar 2? I mean, a massive compliance exercise. You operate in over 180 different countries. Once the UTPR kicks in 2025, it effectively puts the entire organization subject to Pillar 2, absent the U.S. because of the UTPR safe harbor. But how are you generally approaching getting ready for Pillar 2? And I also will mention for listeners that you are the envy of many taxpayers in that you have a June 30 year end. So you do have a few extra months.
We have a June 30 year end. We're also the envy of many of my peers that we have one financial platform system.
Right.
So as I've told people, we're as capable probably of any multinational to getting ourselves ready to be compliant with new compliance requirements around the world. If I think about Pillar 2 for a minute, I can pretty quickly on the back of the envelope determine what I think the Pillar 2 financial impact is for the company. Taking that and translating it into what I think governments are expecting from a compliance and reporting perspective, that's a very significant undertaking, even for a company like ours that has got one financial platform system that understands the importance of compliance and invests in those processes. And that has multifunctional teams that get excited about these projects. It's still a significant undertaking. Fortunately, we've done, and we're way ahead of the curve on country by country reporting. We were able to leverage a lot of that same work as we were building our Pillar 2 capabilities. And we're a couple years into that process, and we're still don't know exactly what the compliance requirements are going to be and what information is required. But I feel like we're in a good position to do that. But it hasn't been without a significant amount of effort and investment by a company that was as well situated to be able to handle that as anybody.
Yeah. And just to mention, I mean, one ERP system, you talk about the tax reporting.
Yep.
I mean, that is pretty unusual for an organization of your size. In fact, it might be the only one that of taxpayers of the major, and oftentimes because of deals. But I think P&G has always made that a priority as you've done deals or whatever to make sure that you integrate from a systems perspective. And your point on sort of creating that diligence or hygiene, however you want to describe it, for country by country reporting, put you in a good position to then be able to sort of translate that into Pillar 2. And
Right.
of course, it's a much bigger lift for Pillar 2.
Yeah, it's a big lift. But we're making progress.
All right. So let's move on to some of your priorities from a policy perspective. And we're going to start in the U.S. and then we can, talk about globally. But one of the things that I know P&G has always been very focused on is educating policymakers. And maybe talk about your philosophy to that. And about half of our audience here is outside the U.S. And maybe talk about kind of your general strategy with U.S. Policy. And then I want to get into some of the TCJA provisions.
Sure. Well, like I said earlier, our policy platform isn't really different whether we're in the United States or Europe or Latin America or wherever it might be. We like policies that grow economies, contribute to a healthy consumer, policies that are easy to implement, easy to administer, transparent. And so that's really no different here. I think, we have spent the last, as we come up on the Super Bowl of tax here in 2025, we've been spending the last couple of years really educating lawmakers on what we see has been the benefits of the 2017 tax changes. And I think the U.S. certainly is the envy of many countries around the world in terms of our current economic situation and the growth in the United States. And I do think TCJA played a role in that. And I think, we want the U.S. to continue to be a very, very competitive place to invest. And in that regard, over the last couple of years, we've been trying to help educate lawmakers on what we think those impacts of TCJA have been, or what they've contributed to. And I think, as we've worked with other companies and if we've tried to align in terms of what we think are going to be the priorities as we get into this 2025 debate, there's pretty good alignment across the business community. I think we all believe the rate is a huge has been a huge benefit in terms of making the U.S. a very, very competitive place to invest. Certainly the move in 2017 to a quasi-territorial system was a huge enabler from a long-term competitiveness point of view. I think we would all admit there's probably some additional opportunities there. And then what can we continue to do to make the USA the most competitive place in the world to innovate, right? And things like, I don't think any of us ever thought that a lack of R&D expensing and capitalizing the amortizing would ever come to fruition, but here we are. And, that's a simple example of a policy that could get changed to continue to make this place.
Right. And not huge in your industry and sort of consumer products, right, compared to tech or life sciences.
Yeah.
It's still relevant.
It's still relevant. I mean, we spend $2 billion a year on R&D.
All right. That's a meaningful number.
But it's not our number one issue like it might be for some other industries. But I think, the rate, continuing to let U.S. companies compete as effectively as they can compete around the world. And let's make the U.S. continue to make it the most attractive place to innovate and invest in innovation. I think those are the priorities. And that's what we've been trying to help people understand why those priorities are real and what they can achieve.
Have you seen your investment profile change in the U.S.? I mean, any examples since TCJA? I mean, how has P&G sort of specifically kind of thought about TCJA, or how has it impacted your investment profile?
Yeah, I think, whether it's attributable to TCJA or other factors, again, I would say TCJA certainly is viewed as an enabler. We've seen disproportionate investment in the United States post 2017. If you look at just our proportion of sales in the United States compared to the rest of the world, we've seen a disproportionate growth in the United States. And for us, the way you grow sales is, and if you want to drive consumer trial, you invest in the brands and you invest in marketing and advertising and research and development in the brands. And so an increase in sales would suggest there's been an increase in marketing and advertising in those brands in the United States. And again, with that disproportionate growth, we've had to invest significantly in our plant and equipment the last 7 or 8 years. We've got 2 or 3 new very large facilities we've built. We've continued to expand existing facilities and invest in productivity. I think the latest numbers are we're close to, I think, $10 billion over the last 8 years in our property, plant, and equipment here. And we've seen huge employment growth to be able to service those investments in the plants and other roles in the supply chain. And so we have seen disproportionate growth here. It's interesting in a business like ours. It's a challenge every day for our brands and our countries to achieve investment dollars. We don't have an infinite amount of money to invest. We have to make decisions every day. We're going to invest in Europe. We're going to invest in Latin America. We're going to invest in the United States. We're going to invest in shave care. We're going to invest in our baby care business, our fabric care business. And generally in that scenario, not all decisions are made with a financial analysis based on after-tax rates of return, but that ultimately is a huge factor in where we decide to invest. And when you bring the tax rate in the U.S. from 35% to 21%, all of a sudden, an already attractive place to invest for a company that's been here over 180 years becomes even that much more attractive. And conventional wisdom would say it should win incremental investment dollars. Mm-hmm. And again, we've seen disproportionate growth here since 2017. How
do you deal with the fact that, because the majorities in the Senate have been so slim, and we haven't seen a tax bill. Most of the major tax bills that we've seen over the last 10 plus years have gone through reconciliation, and this is always very confusing for folks outside the U.S. that we have these tax policies and then they expire, right? And that's what we're seeing in 2025 with the TCJA. We're likely going to see another reconciliation package. Who knows how long that will go. How do you deal with communicating that to stakeholders, and more specifically, how does that impact P&G's kind of investment decisions? If all right, well, we've got it right now for 15. Now that was the one permanent thing, obviously, as part of the TCJA. Yep. But, with FDII, for example, potentially moving up, how do you deal with that from sort of a business and communications perspective?
Yeah, it's a good question. I think if I come back to tax certainty for a minute, right. One of the things that could that we would have a real opportunity as a country to do in achieving tax certainty is a bipartisan approach to really any policy, but since we're on the cross-border tax talks, tax policy, right? But that hasn't been in the cards. And I think education about what the current political environment means in terms of long-term certainty, long-term predictability is something we've spent a lot of time making sure decision makers in our company understand. And then at the end of the day, when we're trying to educate Congress, we're not just focused on one side of the aisle. We're focused on both sides of the aisle. And so it's an attempt to make sure that those that ultimately are in a position to influence policy understand what the business communities and P&G's perspective is, what is good policy. But then internally, it's about taking what you're given and dealing with it and trying to make the best of it. But I think again, I think the corporate provisions were made permanent. By the way, a lot of those were paid for, right? We had a pretty significant toll charge.
Right.
There were other base broadeners that were utilized to pay for a lower rate. We thought that was a good trade-off, and understanding and not being naive that there was some risk when we got to 2025. I think we hope that legislators would see the positive progress made from a pro-growth corporate tax system, and hopefully continue to make that a priority as we think about long-term tax policy broadly for the U.S.
All right, so let's move from U.S. policy to global policy. And you'd mentioned how about you engage with policymakers around the globe, trying to help to educate them and understand. But I want to start with I want to move to the pillars. And we'll start with pillar one. Tadd, on this podcast, I've been saying for a number of months, I feel like over a year at this point, that Pillar one, Amount A, is dead. And particularly now with the new Trump administration and the Republican-controlled Congress, Wanted to know if you generally agreed with that, with amount A. And, this is something that was obviously relevant for P&G given the size of the organization. And I think many would question whether when amount A was designed, whether a company like Procter & Gamble that makes diapers and other consumables should even be subject to that. But do you lose any sleep anymore about amount A, or is that put to bed?
Yeah. I mean, I think when something's dead, you expect it never to come back, right? I would call it, I think there's going to continue to be a desire for market jurisdictions to ensure that they believe they're getting their fair share. And so whether it's a Pillar 1 amount A or some other approach, I think we're going to continue to be in this discussion about what is the best long-term approach. And, the reason we've been involved with the pillar since their inception is we're very supportive of anything that can bring some stability to the system, because I think we would all agree there's instability right now. And so we've been supportive of the projects. I think Pillar 1 in its current form, certainly in the short term, is maybe dead. Okay. Maybe
amount A.
Amount A, maybe on life support. Amount B, which is a kind of a safe harbor, if you will, for routine marketing and distribution activities, I think is a huge opportunity, and one that I hope doesn't die, because I do think it can bring stability to the system. I think it can bring certainty to the system, and I think it can make sure that resources are used rationally from a tax administration and taxpayer perspective. And so we've been very involved in the Amount B project. We're very supportive of it. And so we'll continue to support efforts to try to move that project along.
So let's move on to Pillar 2. Pillar 2 was really, I think, advertised to policymakers to sort of stop the race to the bottom, to end tax competition. And I think if there's one thing that we've seen over the development of the last couple, 2.5 years or so, is that countries are still going to compete for foreign direct investment and use whether it's tax policy or other types of incentives. There was also this expectation, I think, amongst a number of different countries, and we've seen this with what they've publicly stated about huge revenue that they were going to generate as a result of Pillar 2. And I think many are questioning now, after the rules have been out and as companies start to comply and do the math, and many taxpayers are going to be able to rely on the transitional safe harbor. Of course, those that operate in jurisdictions below 15% may have some top-up tax. But any thoughts on kind of Pillar 2 from a policy perspective of the UTPR, which is going to kick in and again, make all of P&G's subsidiaries potentially subject to Pillar 2 other than the U.S. while the safe harbor? Any thoughts on kind of where we're going, or comments and thoughts to policymakers as they're thinking about Pillar 2, knowing that it's already enacted in 38 countries?
Yeah. Look, I think countries have always possessed a sovereign right to establish how they want to tax investors in their country. And so, there's aspects of Pillar 2, just like the U.S. adopted its own version of an income inclusion rule.
Right.
Guilty. We've had Subpart F on the books for 50, 60 years. I never had a concern with countries wanting to adopt a minimum tax. If they want to adopt an income inclusion rule, great. I think the UTPR as its existent state today, certainly that I think is the challenge for many policymakers. I think it's the challenge for many companies. It's not the biggest issue for us, but I think it's one that is going to continue to get debated and continues to need to be thought through, just because I do think it creates a lot of uncertainty, right? There's a lot of uncertainty about what the U.S.'s reaction is going to be if we can't otherwise get it to a place where we think it can work for and is fair for U.S. multinationals. So I view it as something that it's not dead, right? It still needs some work. And I think that's been acknowledged by many policymakers right now in the U.S. So we'll see how it evolves. But, I'm hopeful we'll eventually get it to a place. I'm talking Pillar 2 generally. Yeah. Okay. I'm an eternal optimist. You know that, Doug. You know me a long time. I got to believe it'll get to a place that can be workable. But I think there's still work to do.
Yeah, I share your optimism. The QDMTT, I mean, that's a tax on a country's, sovereign country's own tax base. Feels like there were easier ways to go after that than create an entirely new accounting-based tax system, but that is what it is. The IR is, I'm with you, very similar to GILTI. And then the UTPR, I think, does present a number of policy and administrative challenges. And we've already seen, at least one lawsuit at this point filed in Belgium related to whether the UTPR is consistent with EU law. So we'll see how all that. And then I think there'll be a number of treaty challenges. We'll see how all
that's the certainty and predictability point, right? And retaliatory measures, other things, right? It just creates for something that was intended to create stability in some respects has created instability. And that's a lesson learned with tax policy. I think particularly when you're trying to do it at a multilateral level, I think that's always the risk. But look, stability is important, and we want to continue to play whatever role we can play in helping to try to help think about what that stability can look like and how to get there.
It's a great perspective, and that, this really is a grand experiment, right? We've never had this consistent tax base across the globe. I mean, it's frankly fascinating to be practicing at this time. Sort of seeing this the first global tax system, and who knows how it all shake out. But again, I share your optimism. All right, so we're going to move from tax, and I'm going to have one last question for you. But Tadd, you've been a fantastic mentor to me and many others over the year. So the question that I wanted to end with today is, what's the most valuable piece of career advice that either you've received or you give, or what career advice do you have for somebody listening to the podcast?
That's a really good question. And as I thought about it, or as I think about it, I think the advice I would give is the same that I received back when I was just beginning my career, and I've gotten throughout my career. But look, there's no substitute for a great mentor, right? And I would tell anybody that getting a mentor, getting a coach, and they can play different roles, but having a good coach, a good mentor, good role models is incredibly important. I remember when I just got out of school and started my career, there were people that I looked up to that were really influential on me, just the way they their work ethic, how they worked with other people, how they communicated, how they inspired. That was very influential on me, and I've always kind of wanted to pay that back. And I would say the other thing is having a growth mindset, right? A mindset that I'm willing to try to go do things I'm not comfortable with because I know it'll be a learning opportunity. Being afraid to make mistakes, right? And understanding that we've all done that in our careers. Those are our best learning opportunities. And so those are probably the couple pieces of advice I would give.
So I'm going to give you, you did this to me early in my career when I was an associate. I think you were a senior manager at the time. And I had been told before I started that I was going to be doing 100% consulting after I finished law school. And I ended up with a stack of tax returns on my desk. And I wasn't that excited about it, as you might remember. And I remember kind of coming into your office and being like, hey, the partner had said that I wasn't going to have to do this. And I will never forget this. And you had such a good perspective, just like, hey, use this as a learning opportunity. And make sure as you're going through and thinking about subpart F and thinking about interest expense apportion, you can learn a lot. And it's like eating your vegetables. I don't remember if those were actually your words, but
I get it.
It was and I was like, oh, all right. And I sort of took that back and was like, all right, how can I use this as a learning experience to learn the tax rules through a compliance exercise? And I since have done a lot of compliance since then. And it was a really valuable lesson. And you were like, yeah, just, think about it, learn, use that opportunity to learn, even if you're not excited or comfortable about it.
No, and look, I got that lesson a few times early in my career too, which is why that stuck with me. But I'm glad you remember that.
All right. Well, Tadd, always a pleasure having you go on. The time flies by when we have these conversations. So look forward to a future conversation. But thank you very much for sharing your and P&G's perspective, and a lot to look forward to in the future in the context of international tax.
I agree, Doug. Thanks for having me.
So thanks for tuning in to this week's episode of Cross-Border Tax Talks. Thank you, Tadd Fowler, Senior Vice President, Treasurer, and Global Taxes at Procter & Gamble. I'm Doug McHoney, PwC's International Tax Services Global Leader. Stay tuned for another exciting edition of the Cross Border Tax Talks podcast.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.